Hey guys, this is a market update. An update on my short-term trades and also some macro data, which I think looks pretty good for the next move for Bitcoin. Gold looks like it wants to break out. Stock markets at all-time highs. As long as those assets are continuing to range higher, then I think Bitcoin will as well. So some updates on what I've traded here. This wick right here, I did have a bid that got hit. But look, this weakness in the price action looks like it's going to continue, right? Just fairly weak, right? Not really much happening, to be honest. So I want to bid basically all of this level right here. If we get around here, I've got lots of bids in that will obviously get hit. If you want to see exactly where the prices are and when I trade, that's in the Discord server as part of the crypto course. If you're in that, you can see all of the details. But basically, look, I just want to bid here because I think we're still in an uptrend, and so I want to bid weakness in the uptrend. But look, we're only 10% off the all-time high, so we could easily drop 15-20%, which would be this level, and I just want to bid here. I think we go higher, and so if I think we go higher, then for short-term trading, shouldn't you be bidding weakness, right? So that's what I want to be doing, and I've got the bids in there, and one was hit, and maybe some others will get hit before we find a little floor, and then maybe move higher towards October, November, which are typically very good seasonally for Bitcoin as well, and so that's really what I'm looking forward to. If you trade as well and you don't have a Bybit account yet, click the link below. If you're a new user, just create an account, make any deposit on there. They'll give you a big deposit bonus to trade with, up to $30,000. Just click that link, go through, set up an account. What we're really looking for the next move is economic expansion or currency weakness, currency printing, currency creation. That's really what economic strength is currency creation, right? GDP strength and inflation strength is currency creation, not the production of goods and services. Because production of goods and services actually reduces their cost because they become more abundant. So what we want is the production of goods and services alongside extra currency creation that counteracts that and creates inflation, which means asset prices go higher. So we want expansion. We want currency creation. We're just starting to pick up in the cycle, and that's great news. And yes, inflation is going to pick up as well. There's some backward-looking indicators there that will keep a lid on it for a while, but yeah, inflation will rise. GDP will rise, and that's the whole point of this. Look at this. This is good news. We want strong GDP. You don't want weak GDP, and then everyone's saying, well, the Fed's going to have to print money again. Let the private market create the currency. That's what the Trump admin wants, and it seems to be that's what they're getting. Run GDP hot, create inflation in asset prices, debase previous debt. This is the game, and it looks to be working a little bit, right? You can see that here. Pretty strong read for the growth rate, 3.3. Real consumer spending, you can see we did have a bit of a dip, but now we're picking up again and going into typically a strong period seasonally for risk assets as well, October, November. So look, that's looking good. This is what we need. We need economic activity picking up. The other side of that is very, very weak economic activity, and then the Fed has to print money and everything. You don't really want that, to be honest, because what happens is that the Fed is always late, and so if you get a lot of weakness, everyone gets scared, the market sells off, then the Fed comes in and prints and it goes to new all-time highs. What I would rather is actually the private market creating enough GDP with some tinkering around the edges from the Fed, right? We don't want a 2020 cycle where it's like all the way down, everyone gets liquidated, then we go up 10x. This is a much more normal cycle, all-time high, pullback, all-time high, pullback. This is fine. This is good news. As long as we get some decent growth figures here, the market can just move higher on it. So that's positive. And I think going into a seasonally strong period, which is autumn, winter for risk assets, that looks good, right? And so, yeah, these short-term trades, I want to be in them and buying any weakness, looking forward 3, 4, 5 months. Gold is also absolutely insane with its price action this year. And everyone's saying that Bitcoin's at an all-time high. Yes, valued in dollars and most other fiat currencies, but that's not hard, right? Like everything's at an all-time high, valued in fiat currencies, right? Coffee, beef, everything you buy is literally at an all-time high, valued in fiat currency. So it's not exactly like a big thing to be valued at an all-time high in fiat. What we really need to look at is, stores of value versus other stores of value. This is gold, clearly breaking out against the dollar, right? I mean, this is absolutely insane price action for gold, a metal you find in the ground. You can see this. I mean, it just looks like it wants to break out higher, right? Versus the dollar. What's important about that is that you actually should be valuing Bitcoin versus the other things that you might want to buy. Other stores of value, property, insurance, healthcare, education costs, everything else, housing. That's what we want to value Bitcoin against. Stores of value versus other assets. Bitcoin is at an all-time high versus gold, but this is a different chart to versus the dollar, right? If you look at the dollar, this thing's massively high. Bitcoin versus gold, we could break out. In fact, bull markets really are where you get this breakout eventually, right? That is the previous bull markets. So we've had this massive multi-year, 4 or 5 year range of actually, coming into a bear market versus gold moving up. Well, that is what I would expect of a real bull market in Bitcoin, which is outperforming gold, putting in the high and then going into another bear market. We're not there yet. Just something else that I look at with my short-term trades, thinking, well, look, Bitcoin has way more fundamental growth than gold, right? And I know gold is getting bid up by the Chinese and they're using that more of a store of value for the central bank, but Bitcoin simply has way more growth. It's much smaller. It can be moved by new capital coming in, which is coming in objectively. And so, yeah, I want to see that. I want to see that bull market. Now, when we get up here potentially, or wherever we get, then I can start to maybe get a little bit bearish and say, look, we have actually outperformed gold. We have this huge expansion. What's the next phase? But the next phase from here, potentially just more ranging, that's fine. But potentially also this bull market that we've had for these past cycles. So that's something I look at where people say, well, Bitcoin's overvalued, it's an all-time high. Look at it versus other assets, not the dollar, right? Because the dollar's a little bit misleading, right? We want to look at it versus gold. So that's what I'm looking for again with my trades. I think worst case scenario, you just kind of maybe come back and range a bit more. That's fine. But best case scenario is you get that big bull market, and that may happen after the Fed cuts rates and with this currency creation that the Trump admin wants, right? They want to create this inflation in GDP. And so they said, hey, wait till Q3, Q4 for this data to start coming out. And it looks like potentially it is starting to come out pretty strong GDP. And that's what they want. They want markets to go higher. So that's what I'm looking for again, right? So risk reward for my trades is, well, if we're at an all-time high here, potentially don't get into some trades. But if we're here, I think the risk reward is still buying any weakness, and then we could get that expansion up. And that's when Bitcoin typically, big bull market and everything, that's when you can get big drawdowns because you've outperformed so much. But we're not really outperforming that much, right? So I think the risk reward is still to go long. The price action of Bitcoin this cycle is completely different. You can feel that. It's much more boring. And that's why people are trying to figure out, wait, like, are we over? Because, we came to an all-time high, but we're kind of drawn down. So this is really interesting from Checkmate, where he says you have kind of 3 phases, right? You have the early adoption cycle for retail, kind of discovering Bitcoin for the first time. You have kind of the Wild West phase, lots of leverage, offshore exchanges, back and forth. And then you have the BlackRock institutional maturity stage, which is volatility dampened a lot. You just have different types of money coming in, but you have a lot more derivatives that trade around the edges of the asset as well, which dampen volatility. And you can really see that, right? We are ranging, but the price is going up in this kind of easy range. Institutional market makers coming in, knowing exactly where supply is, trying to find that supply, bid up the price to get the supply and shake it out. You just draw down again. It's a lot different, right? And it's longer, slightly more boring as well. But the price is still ranging higher, right? And that's important because for trades, the risk reward on a trade is what you have to figure out. For investing, it's so obvious, right? This asset has higher growth rates than every other asset. If you've got a 10-year time horizon, just dollar cost average into it, you're going to outperform the other assets you'd want to buy. It's so simple. But for trading, really it's a risk reward on what's the drawdown, what's the potential drawdown, right? So price drawdown from all-time high, you can see here, slightly different, longer, right? We're getting regular drawdowns here, finding a new price where you shake out some sellers, bring the price down, right? That's the whole point. But if you're not ranging very, very, very high in relation to trend, why would you draw down a lot from trend? If you see these drawdowns from all-time highs, this is because the thing literally went up 10, 15x, very short time horizon here, right? It's a drawdown from this little price that traded up here. Is that a drawdown like from the 200-week moving average and from the realized price? It's not actually that big, right? If you look at the 200-week moving average realized price, it's much smoother on the way up. It basically just goes up and to the right. We're looking at the daily traded price, which no professional person is going to look at that. You maybe look at 10-day VWAP, something like that, volume weighted average price over 10 days or a month or so. That's like the real price, right? The daily traded price is something you shake around to try and get buyers and sellers to move, right? Move volumes. That's the whole point. But any professional investor will be looking at the VWAP, 5-day VWAP, 10-day VWAP, something like that. So are you going to get a massive drawdown if you haven't also just had this huge blow off top, right? So if you look at previous bear markets, the previous one, a bear market is when you draw down, you go past the trend rate of growth and even go a little bit underneath the 200-week moving average. If we were to do that right now, right? The potential drawdown here to the 200-week moving average is minus 50%, and that would be a really big drawdown, right? So you've got minus 50 for a short-term trade, minus 50%, like worst case scenario, if you go under the 200-week moving average, that would be like a huge bear market. But if you come up here as well, right, potentially in this bull market, we could go up another 100%. So you've got a 50% potential downside, 100% potential upside. I think it's still decent for trading. Yeah, it's not a great opportunity like down here or earlier, you know, but the risk reward is, okay, so you get drawn down 50%, I can handle that, you know, potential 80, 90, 100% move to the top of the range as well. So, you know, on balance, we're still pretty good. Now, if we do get up here, then the risk reward is not so great. I mean, where can you go from here? Maybe another 50, 80% move, but the downside could be potentially 65% or more from there. So it starts to get a little bit wrong. I've always said that the little red box is where you potentially let go of trades, or certainly don't open a lot of leverage, high leverage trades long here, because there's not much juice left in the orange, right? But for right now, I think we're still good, and you can just see the price action. We're ranging. It's clear that there's a lot of demand here, but look, this demand is solid long term, and they're not going to trade like this, like the Wild West trading up and down, right? It's different. It's long-term money, savings money for the ETFs, pension fund money. They're just like, look, we're just going to keep ranging in, keep putting the money in, right? So it's different, and I think the risk reward is still favorable, right? If you don't have a huge blow off top, then why would you come down 70% from there, right? Would you come 70% down from here? That would be down to 35K. Very, very unlikely, right? So I think the risk reward is still there. That's why I'm still trading long. Look, I don't know what's going to happen to the price, but you just play the percentages when you trade, right? If you do trade and you don't have a Bybit account, link below to a huge deposit bonus. Whatever you deposit on there as a new user, they'll give you a bonus. The crypto course, I'll link it down there as well if you want to get into the Discord server. There's 300 videos on how to invest and trade as well in the crypto course. All links below. I'm James, this is MoneyGG. Cheers for watching, and I'll see you in the next one.